Hello, everyone. Thank you so much for joining us yet again for our Mortgage Minute with Linda May Tomko, the financing or home financing advisor with ScotiaBank. She is here today to chat with us about what went on with the Bank of Canada interest rate drop last Wednesday, and then what the next little bit might pertain to the next rate announcement as well. Lots of questions about what's the difference between a fixed rate and a variable rate and how they are calculated or decided upon. So, Linda May, the floor is yours.
Hello, everyone. I hope your summer's going amazing. It's been a definitely an interesting one. Rain, fires. Um, Hopefully you're getting a vacation. I'm certainly not because I've been extremely busy, but so rates as of last Wednesday, Bank of Canada did lower prime rate, which I guess, everybody in Canada is probably happy to hear that. So they did lower it 0.25. The projections are that they are going to kind of keep this momentum going where they're going to lower. Alex seems to think they're going to go a little quicker on it. I don't know. I mean, I think we'll probably see another 0.25 drop in September. After that, it could be higher. I don't know. But I've had lots of questions regarding when every time prime rate lowers, I have people calling me, can I get a lower rate on my mortgage? And and the answer is kind of yes and no. So depending on what fixed rates do after prime rate or where the fixed rate yield falls after a prime rate reduction, you may be able to kind of get a lower rate on the fixed rate mortgages. But fixed and prime are two totally different things. So prime rate is based on Bank of Canada's prime lending rate. Fixed rate mortgages, when you fix your mortgage and you lock into, anything from 6 months to 10 years, you're basing it off a bond yield. Most mortgage rates are based off the 5-year bond yield in Canada, which currently is sitting at 3.30. Now, there's always, a little bit of an increase on that when it goes to the banks. So that did lower slightly. So on the 19th of July, the bond yield was 3.35 on the 5-year yield. That slightly lowered to 3.3. So we could see some fixed rate reductions happening into the market, within the next 2 weeks to, I don't want to call an exact date, but 2 months maybe. Um, so yeah, basically prime rate is there's certain dates that they're going to release these projections on, or whether they're planning on lowering the prime rate, and that was July 24th, so last Wednesday. The next rate announcement is September 4th. I'm going to say they're probably going to lower. Alex is probably going to agree with me, but only time will tell. October 23rd will be another rate announcement, and then December 11th will be the one after that. So hopefully we keep seeing, steady reductions. And then I think eventually, the bond yield you'll start to see some reducing on that side of things.
You are right. Alex will agree with you that the interest rate, Bank of Canada overnight lending rate will go down. Should have been going down earlier. They delayed, but they have no
Mm,
excuses.
no.
Inflation is well below the 3% mark. You take away interest costs, it's actually below 2. Price of gas is going down, price of oil is going down. All the indicators year over year, sorry, prices. So that's going to crush inflation. We might go into a negative inflationary period, which then will really have to force the issue. Meaning we might be in a recession, but just don't know it yet. But let's wait and see, because that's what happens every time there's major rate decreases. So who knows? But do know this. If we are in a recession, that does mean your fixed interest rates are going to be going down, which only hurts you if you're an investor looking for fixed income products.
Right, exactly. So what does that mean for the coming market? While fall market is always at, maybe slightly less busy. Sometimes it's equally busy to spring. So I think if rates continue to go down, we're going to be in for a very busy fall market in Alberta anyways.
Yeah. Yeah, so that means get your pre-approval done now, because if the rates do go down, you're always guaranteed the lower rate of the two, and if rates go up, you're still guaranteed the lower rate, which would have
The
been
two.
the
Yeah,
additional
for sure.
approval.
Yeah,
So
we can do
make
a
sure you reach out to them.
120-day rate lock on that. I mean, the rate locks aren't as important when rates are going down as they are when rates are going up, but you can lock in your rate now, and if rates go down before possession, you always get the better rate if you're with me. I can't speak for other lenders, but that's how it works on my side of things. And what happens when rates go down to house prices, Alex?
They usually go up.
Yeah.
Yeah.
So we don't have a lot of sweet spots, but right now is probably a sweet spot. Rates are on their way down, house prices on their way up.
Yeah. So again, get your pre-approval, speak to your professional realtor, make sure that you're making the right decision for you. If you're looking at a refinance, definitely reach out to Linda May, because she will be able to tell you whether or not it is the right decision for you, or waiting until your renewal period. That's all from me. I'm Alex Ward, broker owner of Maxwell Devonshire Realty. This was Linda May Tomko of Home Financing Advisor with ScotiaBank, and we can't wait to see you in September. See you, everyone.
Yeah.